All right, hey traders, TG Watkins here. Let's see if we got everything up and running. Sorry, it took me a second. I had to keep reloading the simpler trading page. So looks like we are good to go over there. And then let's see, we can flip this on over here. See you guys all in the YouTube and Facebook page. There we go. We got the lights back there, make it a little bit fancier for everybody. All right, so we got what today is Wednesday, August 30th. We got one more day of August. We'll see what kind of shenanigans that the market decides to keep up for us. We've kind of been seeing some of it, maybe a little bit of window dressing towards the end of the month. We got this pop, but also we got some economic data that we're going to be talking about, and we can go over that. Looks like we got a couple, some people chatting already in, I guess, YouTube. So brighter side, good to see you. Yeah, we'll talk about that. The bounce has you skeptical, certainly. Yeah, and ARC, USPS, UPST. So yeah, definitely we got some of that. We'll be talking about. Cool, lots for us to work through. Yeah, Go Fish, same thing. About Rut, Canary in the Coal Mine. I do have some thoughts, and it's TG, just so you know, like Thomas Green, or TGI Friday, or whichever one that you want to go with. All right, so most of you guys know me, but anybody else who is new out there, you can find me over at simplertrading.com/Moxie. We have a $7 trial for 30 days, or you can check out profitpilot.com. And that's where I do my bi-weekly or, well, twice a week newsletters. Bi-weekly means every other week. All right. Oh, yeah, niceness here. Okay, good to see you guys. All right, so let me kind of fire this up. We're trying to do a few different things as we begin. And so let me kind of get back to that. I'm gonna have to figure out how to like really get this thing docked over here or something. So anyway, we can talk about some of the economic data, and we'll go through the SPY and the dollar, TNX, internals, and then we'll go through the tickers. So we'll kind of see if we can follow this path a little bit. Now, if you come over here to the economic calendar, we can see that we've had some stuff this morning. Mostly GDP. They were expecting 2.4. We got 2.1. And then I think the other one that was kind of important, jobs, or as I hear jobs, they were expecting 195,000. We got 177. Now, the interesting thing is, let me go on yesterday. Let's get back over here because JOLTS. Here, I think this was the big deal yesterday that everyone was talking about. And let me get that. There we go. So if we look over here at JOLTS, now here has been part of the economic data that the market people have been looking at for the Fed is that job openings. You know, at one point we had 11 million job openings, then it kind of got down to 10, and now it was in 9. And one way to look at that is, so even though, you know, let's see, how do we phrase all this? So because the economy is really hot and we have inflation, and the unemployment rate is pretty low, which could lead to wage inflation and which could keep this whole cycle going. That the job openings was also a form of a tight labor market, meaning that if there are still a lot of job openings, that means that there's still a lot of demand that's not being filled, and so employers will start paying more, and all this stuff kind of raise rates, and then interest rates go up. And so, in order to see change in the economy, the Fed, as one of their numbers, wants to see the jolts go down. They want to see the job openings go down because that means that's taking pressure off of the labor market, and it's showing that what they're doing as far as trying to slow down or contract the economy is good, or at least it's happening. And so this is one of those numbers that they're looking at to see if it's actually coming down. And I forget how many tenths of a percent that every million jobs is worth. I heard that stat someplace at some point. And so I think this would be bad news is good news. You know, as perverse as the market tends to be, bad news for the economy is good news for the market, because what this is saying is, yes, the number of job openings is going down. That means, yes, our economy is probably shrinking. So that is bad for the economy. It's, recession talk, that kind of stuff. But it's good for the stock market because the stock market's looking at this as a way of saying maybe the Fed is going to be less hawkish. Maybe they're going to kind of pause and hang out here and say, look, our interest rate raises are having an effect, and we are starting to see this contract. And the market's like, yay. that means the Fed is closer to pivoting and going to an easier stance, and they're not going to tighten as much, and we'll have a favorable environment. And this is where the big discussion and controversy comes up is, okay, so if the market wants the interest rates to go down and they want a more favorable Fed policy, is that going to be good for the market? Because a more favorable Fed policy is actually happening because the economy is going down and shrinking in recession. So which one is it going to be? And that is the biggest argument right now that everybody's trying to figure out. So if you know exactly which way that's going to go, we can make some money and figure out which stocks are going to do well. And that's why there's so much push pull during this time. So anyway, that was the biggest thing yesterday. That's why the market went up. And on the back of that, we can see, well, let me see if I'm still following my plan here. I'm going to skip around a little bit. That's going to be why the dollar, when we come over here to the Dixie, you can see that's why the dollar is rolled over. At least that's the idea, is seeing because of that economic data. And it seems to have happened right when that news came out. You can see that the dollar was actually up for the morning yesterday, and then it totally got crunched and rolled over. But that was also the same time that the market rolled over. And with that news coming out, so yes, it does seem to be related. The other thing we can kind of show you, and I've been talking about this for quite some time, but trying to be, not super precise about it because there's the dollar, it does have a lot of macro things involved, and that's not my specialty. But generally speaking, I have been looking at this and saying, price should not be over the downtrending monthly 10. And in fact, as long as price stays below the downtrending monthly 10, we should be seeing the dollar in a decline. And a down dollar should be good for the stock market and for precious metals. And there were a few days to where the dollar was over the monthly 10. I was like, well, I wonder if this is going to change. It's got to start someplace. If price is going to go up, it's got to start someplace. Like it's transitioning here to get over the monthly 10. However, if it was just a jump, like a look above and fail, well, then we're still in a downtrend. And we have one more day until the month is over, and that'll mean that this candle is closed. And so I made a post to my subscribers this morning and just kind of was saying, hey, I wonder if we're going to close below the monthly 10 and continue this downtrend. And we also noticed that price did run right into the underside of this monthly or weekly 50. So we're very mixed. I don't have a clear answer. I'm just kind of noting these things, below the monthly 10, below the weekly 50. But at the same time, it has been very sideways and very sideways. And in fact, we had an undercut and rally. And there are clues that the dollar could keep going higher, but also it could go lower. We're really just stuck in the middle here, and we don't have a clear answer. So that's why I haven't been doing too much about that. And then if we look over to and I just want to just point out this. How about the other thing that we can kind of look at as far as the dollar, and this goes with the Moxie indicator and any other ticker that you might be looking at. Notice how we had price going up, 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 up. Notice how the Moxie indicator had been going down. That is your form of negative divergence. That was telling us that at some point this thing's getting, a little unstable to the long side and likely to pull back. So if you guys had individual tickers and you have the Moxie indicator and you start seeing this, along with some of the other things like running into the monthly 10 or the weekly 50, then you can then look at that and say, my position. Again, I know it's the dollar, but this could be any ticker. And if you start seeing these negative divergences, that means you should probably start cashing in a little bit and reducing your exposure on that particular name. And then lo and behold, here we go. We got our Moxie price trigger today. So talk about pretty good timing. And you can see those Moxie price triggers to the downside for the dollar were pretty good timing as well back then. So that's why I'm still mostly maintaining my bearish stance on the dollar, but I'm not going to be too strong about that. And really, we've been going sideways for so long, so it's gonna be loosely held there. We can also look at the TNX. Okay, I guess we'll wait for the computer to do its thing. There we go. And we'll probably have to restart to Thinkorswim after this just to make sure I'm good. All right, the other thing to note is that we'll have to see if the market is going to continue to push through that at some point. The other thing we noticed is that it came up here and it was running the third ATR, and a lot of times after it hits the third ATR, it does like to pull back. So that makes sense. Now, the time that this might actually be different is it didn't, back here held the 21, basically held the 21, did not hold the 21, did not hold the 21. So this could be a little bit more serious to the downside and would also lend itself to being favorable for the market for equities. And we could see here, price went up. Notice the Moxie indicator went down, and there's your Moxie price trigger. So again, with the whole timing situation, getting overbought, needing to pull back, a lot of these things that I show are very consistent as far as the Moxie indicator goes and the rules that I teach. And so, yeah, the Moxie subscribers know this because, well, I put out a weekly video that covers all these things. And so we've been watching this. And this is why I've been generally looking for the market to move up. So then, brighter side, to your point, talking about the NASDAQ and all that, we kind of come back here. Let's talk about the SPY pop versus the IWM. We can throw in the NASDAQ with this too. Maybe we can talk about ARK as well with that. And so let's come over here and let me show you first the SPY. Now we know that things got really, really overbought and everything got on one side of the boat and that the market was likely to pull back, and it did. Well, look where it pulled back into the weekly 21. So for now, initially, that's going to be something that I'm going to say, hey, this is probably going to be an area of support for now. And it will either, come down here, find support and continue on, or it's going to come down here, bounce, and that's actually going to do a double top and then we go lower. Well, which way is it going to be? Well, we don't quite know yet. That's what we're still in the middle of trying to find out here on the daily and hourly. And Nick, I think you get this, and I've been talking about the subscribers to this, is that we should probably still pull back, one more time in through here. It has been making progress, but ultimately, we still have the 50 below the 200. Okay, that is an issue. It's not quite resolved, and we're going to have to see if the pullback that I'm expecting, whenever, is going to be into support or if it's going to actually be into weakness and continue failing to the downside. So yes, we've had a nice pop. That's great. Maybe it's kind of like getting the cat out of the bag, but I don't want to be chasing it up here. This is not an area where I want to be going long. We still have this distance between the 50 and the 200, and I want to see price come down here, maybe find some support again, and then go up or something like that. I don't know if it's going to be that far down, whatever, but I'm not totally comfortable really saying the market is go long again, um, with the 50 still below the 200. It's still got a little bit of work to do. So let's see. Yeah, so that's kind of what I'm looking at. Then I'll show you the NASDAQ. Let's see what it says. It's kind of, yeah, same boat. I will say it came down and you can see that there's a really nice elf shoe right there on the daily chart, and you can see there's your double bottom, and things have been working out pretty nicely. So that this all makes sense. It's reasonable, but I do think that there's still going to be a another pullback to really help continue reinforcing this. And you can also see that basically yesterday to today was such a good move that it's starting to put a gap in between price and the 8 EMA. And that doesn't usually last too long. So again, I'm expecting a pullback, and on that pullback, we'll see if this thing is into support or not. Now, the other thing that is kind of giving me some pause as to, okay, expect a pullback. We're still not out of the woods. Let's give it a little bit of time. And Nick, I think this is where you're saying that the small caps are set up the same way, and it has you skeptical. Well, this thing keeps glitching. I'm gonna have to restart this at some point. Let's do it one more time. There we go. All right. The other thing is, yes, if you look at the IWM, it is not nearly as far along or developed as the NASDAQ or the SPY. Then you can see here, we are only partway through the elf shoe situation on the daily chart. And you can also see we're running right into the daily 50. And, we still have that very, very wide distance between the hourly 50 and the hourly 200. So yeah, I think we've still got some work to do. But I'm hopeful. I know we shouldn't necessarily be hopeful in a market. We have to do based on what's working. But I think I see what's happening, and I do think one more pullback would be good and healthy. And if that does happen and it comes down into support and it does move up, well, then this could be a trampoline move on the daily chart. So price below the daily 50, bouncing off the daily 200 while the Moxie indicator is above zero is actually pretty good. And if you remember, I do also like what's happening here on the weekly and monthly timeframes. I've been saying that so far I'm considering this just a pullback, and you can see it's pulled just back on to support on the monthly and on the monthly time frame, and really the same thing here on the weekly time frame. And now we have the Moxie price trigger firing. So I'm going to be leaning to the bullish side until I really see otherwise. So I know you might be skeptical, but let's wait for just that next little pullback down around on the hourly chart. And you know what? If it holds, we're going to have to be bullish. If it doesn't and we start seeing problems, then yes, we can have change our mind and it'll be bearish. The other thing we can do is if we look at, well, of course, I changed my thing. Let's do it this way. SPX A50R. Done it enough times, I've memorized it. All right, this is the other reason that I think we should generally be bullish on the market is that the market got very, very oversold. It came down to 30%. 30% of names were over their 50-day SMA. That's down from 89%, okay? That's a big move. And we're back down into an area that tends to reverse. Of course, it could go lower, but right around here tends to reverse. I would also say that it's the same kind of formation that for now, this is that first bounce. Just like we've seen the market, the SPY is up, but I'm saying, look, I'm expecting a pullback, just like I'm expecting the IWM to do some sort of pullback in through here. And you can see here that even breadth is telling me the same thing. Now, look, the Moxie indicator is actually kind of crossing late. And honestly, there really wasn't much divergence. Price down, price up, Moxie indicator down, Moxie indicator up. Yes, there was some, there's some divergence. And yes, we can see level here, but wait until we get like a real divergence. Then we're really going to see that. If price comes down to the hourly 50 and the Moxie indicator is still above zero, now that's good divergence. Or if this actually comes below the hourly 50 and the Moxie indicator stays above zero, that's some serious divergence. So it's this next pullback that I'm really looking at to see if this is going to shape up. And you can see here, the reason I'm also thinking that is because the arch of the foot on the daily chart, even for breadth. So that's why I haven't gone fully long and everything. Yesterday was a big move. It was based off of the Jolts news, and now we're extended. So I'm just kind of waiting for things to pull back, and then we'll go shopping again. But that's what I'm looking for. We'll have to verify it, of course. But yeah, I think that's fair to assess. Now, Nick, let's go take a look at ARC, and basically the same thing. It's kind of in between, I would say, the SPY and the IWM, because you can see it's kind of ours and now it's up here. So yeah, I think it's coming along, but I still think that there's going to be a pullback that we're going to be able to buy because the 8 is still below the 21, the 50 is still below the 200, So I see progress, but it's not totally perfect yet. So yeah, hopefully that helps you. And let's see, UPST. All right, yep, gonna have to restart this. Come on, come on, come on. All right. Yeah, and if you look at UPST, now what did we do? We got really, really overbought over the last few weeks, and you could see that because, I mean, just look how wildly extended and overbought that was before it finally rolled over. And so, yeah, I know it looks like it got damaged, but a lot of times they just go up really fast. They need to kind of correct. The market does that on its own. And look what it did. It's now coming back into a previous price area, previous price congestion. And then you can see here, it's actually not bearish. It was a big drop, but it's not bearish. The 8 is still over the 21. The 30 is still over the 50. Price is still over the 30. I mean, all the Moxie indicator is still above zero. All these things are still not bearish. It's just a really big pullback. And this could actually be back into support. And same thing here on the monthly chart, back into support. And all it had to do was recycle. It went from really, really, really overbought to now it's back down to where it was before. And if it can regain itself and then start to move back up, then yeah, we can continue to see these names working well. And if we come over here on the daily and hourly, does it look like it's done going down? Yeah, probably. It absolutely got raked over the coals with earnings. Fine, it does that sometimes. And we don't know if this is really going to be a great winner or not. But what I can tell you is it got repriced, it's got reset, and now it at least has the groundwork to repair itself and start to work back up and see if it can actually go. So sure, this would definitely be one of those names that I would watch and see if this starts to work, because if it does, this would be the ground floor. Now, there's still some work to do because, as I've said with IWM and ARC and even the SPY, look at this. The 8 is still below the 21 on the daily chart. There's still a big distance between price and the hourly 50. Like it's got work to do. But also maybe this is the bottom and maybe this can start repairing itself and moving back up. So that's kind of the two things that I would keep in mind and see what you can do about them and just watch them. All right, let's kind of check back over here. Yeah, internals, we did that. That's the 50-day SMA. And then I guess we're on to, yeah, tickers. And kind of work through this. And let's see in through here. Let's see, HLIT. Very interesting for long-term investment. I always curious when people say that, so we'll see what it looks like. Les, we can dive in tomorrow. I'd really actually like to show you that one in maybe 40 minutes when I'm back on in the options room, because yes, I think there's a fair amount of stuff to talk about with the cryptos and all that. So yeah, if you come back, I'm going to do a deep dive on that kind of stuff. Yeah, Nick, this one's a little bit rougher, more than just a pullback, because if you look at UPST, that back on UPST actually back to the upper side of you look at this, and this went from being an uptrend to it feels like it broke. Okay, that's pretty tough. That's a tough situation to be there, and doesn't look too happy. Now I know there are some previous examples where they kind of had some big pullbacks, but this one might be hard to recover from. So I would really be careful about this. When they get hit this hard, they may not always come back very well. And you can also see how long it takes sometimes for them to recover. Because even here, look at that. Look how long that took to turn up. And if you look at the daily chart, when did this finally start going? It started to go basically when the 50 started to cross over the 200. Okay. So maybe you can trade some little stuff in between here and do, day trading, although I know you said longer term. I'd be careful about this. I mean, this one really did get hit. So I wouldn't be in any hurry to get into something like this. Okay, it's got a lot of work to do before it actually resumes its uptrend, and you should be able to see that whenever it happens. And so I think you should just wait. I really just think you should wait on something like HLIT. Yeah, and VRM, I had that one. I've looked at this one too. Go Fish. Hopefully, you kind of picked up what I was saying about RUT. The IWM. That these things are working their way out, but I think that they have some more time because they're just there's a certain order of events that has to happen in order for charts to turn and actually go up. And so I'm not thinking that the Russell is a canary in the coal mine. I just think it's not quite as caught up, and that's telling me that it probably needs to wait a little bit. Let's see, VRM. Yeah, it's okay. It's okay. It kind of looks like UPST where it got overbought and it did pull back into the same thing. It looks just like UPST on that one. So, it's got possibility. And then through here, kind of the same thing. It's got possibility. That was a pretty hard pullback. Give it some time. You've still got plenty of time before the daily 8 crosses over the daily 21. You've still got a lot of distance on this hourly chart. And so a lot of these names got pulled down pretty darn hard, and they're going to take time before they really get set up again. And so be patient on some of these names. There are names that are further along and look better than these. And so I would go with those that are a little bit more ripe. So we'll talk about that, Mara and some of those other names that I think are a little bit more ripe in the market right now. Let's see. Al, let's look at, you want to talk about the SPY daily trampoline move. There is not there's not a trampoline move on the SPY. Okay. So the trampoline move is when price is below the 50, but the Moxie indicator is above 0. The price is below the 50 and the Moxie indicator is below 0. So there's no trampoline move. If anything, this is a Moxie price trigger to the downside, and so that would be bearish. But I'm saying I think this thing happened so quickly, and maybe momentum got pulled so quickly that I'm not quite willing to work with this yet until I start seeing bearishness show up on the hourly chart. And I've got some ideas about that too. Okay, Al, yeah, so Nick, maybe are you guys talking about inverse trampoline move? So this would be an inverse trampoline move because price is over the 50 and the Moxie indicator is below zero. I'm not quite willing to entertain that yet either, because if that is going to actually be an inverse trampoline move, we will see that eventually show up on the hourly chart, meaning that if this, because right around here, I expect price to basically pull back, it shouldn't really be staying up here like this. And so, yes, I expect a pullback. Now, if that pullback continues and goes down, like if price can't get over the hourly 50 and if the 50 can't get over the 200, and price continues to move down, then yes, I'm going to say the hourly chart is proving that this is in fact going to be an inverse trampoline move on the daily chart, and it's going to be a bearish price trigger. But I know this is kind of weird, but at the same time, this could just be a really big pullback. Moxie indicator went red, and if this ends up being bullish, it could start being bullish, and the Moxie indicator will go green the next thing anyway. So this could just be a really, really big dip, and we've seen this, for example, like this. Right here is a really good example. You see how it just barely dipped below red, and then went up. That's what I'm kind of wondering that we might be in. So right here on the daily chart, I'm not quite willing to say, oh yeah, short it and short everything and go bearish. Just not quite there yet. Okay, because this was such a big move to the downside, it could just have dragged the Moxie indicator just below zero, and then it could come right back. And we will be able to see that on the hourly chart. The hourly chart will be able to guide us and tell us if this is going to continue to move up, as in like this pullback is going to be into support, and we're going to keep going up, or if it's going to not be able to do it, the pullback is going to keep sinking, and we're going to keep losing ground, and the 50 is going to stay below the 200. The 200 is going to keep going down, that kind of stuff. So yeah, so hopefully that kind of answers your question as far as that. Let me see if I can find an example. Let's see, what did rig do? Kind of, well, let's see, kind of like this. Yeah, okay. I think this will be a decent example. Actually, I think this will be pretty good. So notice here, you see how we kind of had the same example right here with SPY with rig, and you see how we had the Moxie price trigger to the downside, and then you see how price got over the daily 50 and the Moxie indicators below zero, and you're like, hey, is this going to be an inverse trampoline move? Like, should we sell it? Well, you look over at the hourly chart, and this one was darn close. It was very confusing, but ultimately, it might have sent you one direction, but then it sent you the other way. And you could see initially that price was getting over the 50. The 50 did get over the 200. The Moxie indicator was above zero. But right when it was critical, right when this should have continued to stay over the 50 and move up, and right here where the 8 was starting to get over the 8 was getting over the 21 on the daily chart, and right when price should have gotten over the daily 50 to go up, notice it failed. Okay, so that's the thing. It didn't work. Like you're looking at something, it looks like it should go. Okay, let's see if it goes. And then it doesn't. That needs to be your sign. That needs to be what's important and how that communicates to you. Because if you're looking for a setup that's going to go long, and then it just doesn't, there's your information. There's your market generated information. And then you can see right there, that's where it did not work. And then you can see that is in fact when the 8 crossed back below the 21. It was proven at that point that price did get rejected by the daily 50. The Moxie indicator was below zero and continuing down. And again, you had the Moxie indicator on the hourly chart trend down again. And so that's what I'm looking for the SPY. Which way is it going to go? Is it going to be bullish or is it going to be bearish? And we just don't know that yet. We have to continue to kind of watch this interplay on the hourly chart, but the hourly chart gave you the first immediate sign that it was not going to be bullish. And that's how we could then tell, okay, that was in fact going to be bearish. Okay. So, and don't get me wrong, it could be really challenging. I mean, look how much chop, look how much, up, down, up, down, up, down. Was it going to do it until it finally didn't? And you know what? Fine, there's your break. And that's just how things go. And maybe the fact that it actually chopped around so much was kind of a sign, because if it was going to go, it would have been much easier, smoother, cleaner, and not really giving you that much of a problem. Yeah. Larry, so I think that kind of answers your question too. At what price would you take serious the downside trampoline move? Well, kind of like what I showed you with rig. We don't know what the market is exactly going to look like, but these are some clues to start looking for. And you could see basically also that the Moxie indicator was trending down right and through here. And then it just couldn't work. It just didn't work, you know, it just boom, right there was your exact symbol right there. And you can see right there was also where the daily 8 started to go back below the daily 21. So yeah, just here you go. Here's an example of something that looked like it was about to go long and then it failed. And we'll have to see if the market does that too. I mean, if the SPY looks like it's about to go long right now, but it's not quite confirmed. We still have some issues and we really need to see if these pullbacks actually start working out to the long side or if they start to fail. So Nick, I got to get going, but I'm glad you guys, boy, chatty group today. So very happy to work with for you all. And yeah, you know, since I'm on Facebook and YouTube, just remember you guys can come over here to profitpilot.com or simplertrading.com. And then for the rest of you over in the Moxie group, we'll see you in the options room and the Moxie class in about 30 minutes. So we'll see you then.